Welcome to CEO Money. I'm Michael Yorba. Thanks for joining us. I've got Mish Schneider, Director of Trading, Research, and Education at MarketGauge.com. Mish, welcome back to the show.
Thank you very much. It's so great to be back.
All right, let's talk about the ongoing relationship between the dollar, interest rates, oil, with the FOMC and OPEC on tap, and the ratio between equities and commodities update. What's going on?
Well, right now, I would say that the rates certainly broke down on the weekly chart once again, once they failed this sort of bear flag that they had. But they're coming back a little bit today, which is interesting, and that could just be some kind of short covering ahead of the FOMC meeting, which of course they're meeting today. Wouldn't that be fun to be a little fly on that wall? And then they'll release the minutes tomorrow. But I would assume that their calculation will be that we're still in a healthy economy and that there would be no reason for them to do anything other than what they've already planned to do, possibly raise again in December with potential hikes for next year unless things change. So that's number one. So we're still looking at the gas pedal on the rates. And then in terms of the dollar, what's interesting is that there was a big gap down today in the dollar. And even though it's crept up a little bit from its lows of the day, that's starting to show some signs of stress. And if you recall, last week we talked about how that could be an interesting situation because if the Fed continues their path, they're looking at a 2% inflation rate. But they're assuming that inflation behaves itself. As we know, inflation can get out of control. This is what we talked about last week.
Right.
And then we add oil into the mix because I like to look at the oil market as a barometer for what consumers are feeling in terms of putting gas in their cars. And yes, it's come off, but I think, and we talked about this too last week, that right now what it did was it tested its long-term trend breakout around 1280. It got down to like 1299 in the USO market. Looking at the actual futures, it's more like 60. So I think all the bad news is out, and I actually believe now that oil may stop going down and start turning up a little bit, and then of course OPEC meeting this week, and even though people like to think that they don't have much of a leg to stand on anymore, I think they actually can have a huge influence if they decide to cut back, and of course the Iranian sanctions that are going on, and so there's a lot of reasons I think still to be afraid of inflation growing while equities may stagnate. That's sort of my view on it. It hasn't really changed very much since last week.
What about the ratio between equities and commodities?
Well, as we talked about this as well, equities to commodities were at a 100-year low, and I say were because they flipped up a little bit in that the commodities are starting to strengthen a little bit. And I still see that potential changing very much. Now, I mentioned to you that when we've really seen that ratio flip was during some type of crisis. So the last crisis that happened was actually when the mortgage debacle happened. So it's really, we don't want to see a crisis happen, but even without a crisis, just the mere fact if the dollar continues to sell off, or worse, it loses its status as the world currency, then things really get ugly, and that's where you'll see commodities really start to shine, because where will be the safe place? And that was the other thing we talked about. Where is the safe place right now? Right. Is equities really the safe place? So we had that tradable bounce we talked about last week. So the question is, do we think it's going to still go higher from here? Let's just say if you bought on the basis of the bounce last week, I would probably say good time to take some profits and certainly move up your stops if you're trading with tradable stops, and look at some of these commodities. And they're still bottoming. They haven't really gone down very much, but I think they need to show a little bit more upside momentum before we can say screaming buy, let's go in, gold, soybeans, oil, etc.
You know, you make me smile because one of my good buddies, who's very good with his timing models, has got a top coming in today, and of all things, for the stock market, a potential top coming in today. So it's very interesting when you see, I don't want to say it too loud, but when the stars align and your technicals are meeting some of my other stuff, I really appreciate that. Now, one of the other things you wanted to talk about was the relationship with the Dow and the Russell. I'd like to hear your thoughts on that.
Okay, so if you go back to October 4th, the Dow made a new all-time high. At that point, the Russell 2000 was already trading below its 50-day moving average for 2 days. So that was a big discrepancy between the two. So now fast forward to today, okay? We have the Dow crossing the 50-day moving average, going back into what we call an unconfirmed bullish phase, because we like to see a 2-day close above. And you have IWM still lagging all the other indices today, nowhere near where it broke down from under its 50-day moving average. So I think you have to watch that relationship just like we watched it that day. Anybody who started buying because the Dow was making new highs on October 4th, we know what happened to them. They got killed. And so I think that I would be really careful here before I would say, okay, everybody, let's just go buy stocks. It's going to new highs and everything's okay. A, because of that relationship we're talking about, and B, because of the other factors we just mentioned. Let's watch the rates. Let's watch the prices of oil, what happens this weekend, and of course, what happens with the dollar as well.
Great. Keys to the sectors on the Modern Family. Talk to me about that.
Okay, so now the first sector that really weakened was the one on regional banks. And regional banks are not doing very well today either. And so what we really want to see, obviously, is for some kind of stability within the banking sector. And regional banks is more of your statewide banks. Obviously, we're looking also at the big banks as well. And so right now, they're not really showing much strength today. Then the other thing would be semiconductors, which also had a huge breakdown. So far, semiconductors is still trading within the range that it traded last week. So with everything else breaking out of last week's range, semiconductors, and when I say everything else, I'm referring to the indices, semiconductors are still below. They would have to take out, and I can give you the exact number, if we're looking at SMH, they would have to take out 98.13 in order for it to break out over last week's high. So you're still seeing stress in semis, you're still seeing stress in the regional banks. Transportation, which I think can be a tremendous leader and bring up the IWM or the Russell 2000, has had a nice pop today. It, though, has to go up a little bit more to take back its 50-week moving average, which it broke down from. So what you're starting to see is the rotation once again. We talked about retail seasonally being strong. Well, that has held up throughout this whole thing and still now is running into good resistance. The regional banks not really showing very much. Semiconductors still showing weakness. Biotechnology, where the specs like to come back in, that right now is trading right into resistance. So what we're really seeing is right now a rally into resistance, and for my purposes, unless we really start to see them breaking out over the resistance, I would not be a new buyer. I would instead, like I said, be taking profits off of the bounce that we had over a week ago.
Good. All right, what about the pot stocks and the midterm victory?
Yes, well, there was quite a victory for a lot of the states that had pot on the docket. So like right now we have, out of the 50 states, we have 33 states in the United States that have some form of legalization. We also have 10 states that have full recreational legalization. Plus we have Canada, obviously, now fully legalized, and Mexico below us talking about being fully legalized. So what that means is a lot of interest right now in the pot stocks. So you can look at the individual pot stocks. There's one that I particularly like that I've been watching, which is New Age Beverage. It's a very cheap stock compared to some of the others. It's only trading at $4.50 right now.
What's the symbol?
NBEV.
Got it.
And the reason why, believe it or not, it's kind of a silly reason, but they actually on their can, and it's a tea, it's a cannabis-infused tea, is a picture of Bob Marley. The fact that they were able to score Bob Marley as a trademark, I think could be extremely powerful going forward. But there's a whole bunch of pot stocks to look at. And obviously they're up a lot today. If you want to look at the basket, then there's an ETF for that, which is MJ, Mary Jane, very appropriately named.
Okay.
And that too is now just rallied into resistance. So I would keep an eye, regardless of what happens with the rest of the market, that could still be a big growth area. But kind of like the Bitcoin, when things get too crowded, it also opens up for a crash. Now, difference than Bitcoin, this is actually legitimately traded. But nonetheless, it definitely seems to be a trend. What's so interesting with 33 states, some form of legalization, and 10 fully legal, we still have the federal government making it totally illegal. So it's also going to be interesting to see how that plays out.
Definitely. What about the FANG stocks?
Well, they all bounced as well, but I use a certain criteria for what I consider to be a reversal bottom. What I like to see is a new low that is a low for more than 60 days, let's say a 60 to 90-day low, that then turns around and closes on the high that day, and then gets some follow through the next day with a close above the high from the day before. That's our basic criteria. None of the FANG stocks did that. Facebook, Amazon, Netflix, and Google. None of them did that, but they're all getting a bounce, and now they're all getting a bounce into resistance. So we talked about last week that they weren't necessarily a good measure of the economy, but they're certainly a good measure of how much interest is coming back into the market. So I'd keep an eye on them too. I tend to shy away from stocks that did not make a legitimate reversal bottom, because I tend to think that those rallies are short-lived until they can go back down, wipe out all the longs, and then go back up again.
Yes, definitely. Sage advice. What about emerging markets?
Now that actually did exactly what I just mentioned. It fit the criteria of a reversal bottom. While they've been going down and the market was also going down, but in the relationship between the U.S. stock market and the emerging markets, of course, the U.S. stock market has outpaced the emerging markets tremendously. So now all of a sudden in the last couple of days, they've come off of those reversible bottoms. So you have China doing pretty well today. You have just EEM, which is the symbol for emerging markets, doing well. You have Israel, believe it or not, outperforming all of the emerging market stocks. And then also Brazil, which went up a lot, is obviously coming off a little bit now with some profit taking. But everything is starting to build up in terms of the emerging markets. So even if the U.S. market starts to come down and the emerging markets follow in suit, but they don't take out those recent swing lows that they made, there could be an opportunity there as well.
Got it. Thanks, Mish. Appreciate you being on the show.
Thank you so much. It's great to see you guys again.
My pleasure. All right, you've been watching CEO Money with Michael Yorba. Thanks for joining with us. Like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.